Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
Hello there, I am Yatin Mota.
Well, we started the week on a magical note, so to say, because the Nifty and Sensex both hit a fresh record high today, with the Nifty crossing that 23,400 mark for the first time ever. However, we did succumb to profit booking, and we ended the day in the red. The Nifty below that 23,300 mark, and the Sensex as well, just around that 76,500 mark. Traders were hoping for a rebound in the second half. Just like how the India versus Pakistan match turned out yesterday. In the final overs, we saw a turnaround, and the match, of course, was won by us. But the same didn't happen on Dalal Street. We ended the day well off the day's high. For the broad end of the markets, they were outperforming today. So both the Nifty mid and small cap indices managed to end in the green. If you look at the advanced decline ratio, that was at almost 2:1, and the India VIX also managed to cool off somewhere around 3% or thereabouts, below that 16.5 level. The big drags today, IT and metals, they were among the top losers. In fact, the top three losers on the Nifty were from the IT pack. Cement and fertilizer stocks were seeing buying action today, and aside of that, PSU stocks once again saw buying action. PSU banks were among the top sectoral gainers, and so were the realty and pharma packs. In terms of individual movers on the Nifty, if you look at the losers, you had the likes of Tech Mahindra, Infosys, Wipro, TCS. All of the IT names were under pressure. M&M, Bajaj Finance were the other notable losers on the index. On the gaining end, you had Ultratech Cement, Grasim. They were the top gainers on the Nifty, and so were Hero, Cipla, UPL, Power Grid, and a few other PSU names aside of Power Grid were also on the gaining side. But Yatin, as I was mentioning, cement and fertilizer, these were the two packs that saw buying action today. They were quite active, right? What were the other movers in the broader end of the market?
So, as you mentioned, on the prospect of a good monsoon, and when PM Modi came, the first file that he signed was for the Kisan Samman Nidhi, and he'll be disbursing, to crores of farmers at 20,000 crores. So, yes, two things that probably the government will focus on agri. And will focus on rural markets, probably boosting the fertilizer stocks. And also, apart from fertilizer stocks, we had a whole host of these rural consumption names moving in trade. But specifically talking about Nifty 500, we had stocks like Titagar Wagons zooming 11%, RCF, New India Assurance, all of these stocks up 8% each. Motilal Oswal, and that stock went, ex-bonus, that stock moved 8%. Hutco, because of the rural focus, we had the stock moving 7.5% in trade. Phenolics Cables, Root Mobiles, Patanjali, Z, all of these stocks were quite active in trade. On the losing side, we had the stocks like IRB Infrastructure, Poonawalla, both of these stocks, and mind you, both of these stocks are related to Pune, and both of these stocks were down nearly 8.5%. Suzlon also, on the back of that corporate governance issue with respect to the independent director, that stock also saw a down circuit of 5%.
Right, Suzlon, of course, down 5%, and that's among the stocks that are on my list rather this afternoon. Starting with Suzlon, as Yatin mentioned, there are corporate governance concerns that have taken center stage, because of which we saw a knee-jerk reaction on the stock, down 5% today. In fact, the outgoing director has flagged off issues with regards to communication. He said that communication lacked openness as well as transparency. However, the Suzlon management has clarified in a meeting with analysts. They've said that the resignation was not due to financial or operational discrepancies, and that issues that were raised were soft in nature and process oriented, and they will be addressed in due course. All legal and financial disclosures have been fully complied with. That's what the management has said, that they have met or they have complied with all the regulations, and the company will be working on areas of concern. If you look at what the analysts had to say post the assurance coming in from the management, JM Financial, it has maintained a buy rating on the stock. Target price has been kept at 54 rupees per share. In fact, Nuvama has also maintained a buy rating with a equal or with a similar target of 53 rupees per share. Nuvama has said that the turnaround or the structural upturn that we have seen in the wind sector is here to stay, and that is why it has not changed its outlook on Suzlon even after this bit of news flow. In fact, the company is turning around its financial position, and operational ramp up could be expected in FY25. That's what Nuvama has maintained. It has also noted that the management has put the needs of the business first, and it will be implementing best-in-class suggestions in due course of time. Of course, Suzlon has seen a fair bit of buying interest. Jatin, in the last 1 year, the stock has given 2x returns, and of course, we can see that there has been a knee-jerk reaction, but going by the fact that financially it has turned around, brokerages have maintained or retained their faith in the company.
Absolutely, and if you look at Suzlon, what a multi-bagger it has been for the last 12-18 months, and clearly corporate governance issue do disappoint sometimes the institutional investors, when independent directors are probably given more weight on that front. But moving on from Suzlon to other stocks, and today on our list is MGL. Now, Mahanagar Gas came out with earnings, and post that we had the analyst conference call, in which the management has guided for higher single-digit volume growth, which probably was appreciated by a lot of brokerages. UBS has a buy call on Mahanagar Gas, which is MGL, with a target of 1600, and Motilal Oswal also has a buy with a target of 1565. Obviously, MGL says that they will be looking to do a volume number of 6 to 7% for FY25. Most importantly, they will benefit with the potential inclusion of gas into the GST ambit. Now, we have seen the oil secretary also talk about how the government is looking to get oil and gas products into GST. Petrol and diesel might be no, or probably later on, but gas, yes, is a priority that the government is looking to with respect to the GST inclusion. Also, MGL says that electric mobility as well as foray into LNG transportation could scale up in the coming years. When it comes to Motilal Oswal, they say that 1,000 crores of capex that was guided for FY25, 200 crores will be dedicated to UEPL, which is the new acquisition. Obviously, the hopes are that this acquisition, once the capex is done there, would ramp up significantly. Let's see how the growth trajectory looks for MGL. But yes, the brokerages are quite impressed when it comes to the growth prospect for MGL when it comes to the gas ecosystem.
Right, that's one development that will be keenly watched out for, and yet gas stocks have been seeing traction in anticipation of this move being implemented. But on that note, the other stock on my list today is a tire stock, Ceat. It had an analyst meet wherein it has laid greater emphasis on strategic areas like increasing exports, becoming the number 2 player in the passenger car radial segment by FY25 end. And these are some of the comments that have been received very well from the markets. So brokerages have also come out with respective notes. We will focus in on that, but let me highlight what the management has said at the analyst meet. It will be strengthening its brand presence in domestic replacement segment. It will be expanding into export markets, particularly in US, European nations as well as LATAM. In fact, market share gains are expected to be led by strong network push. It expects to become the second player in passenger car radial segment by FY25 end, and it believes that better dealer profitability, product innovation are some of the things that will drive market share gains for the company. And it also expects over 25% of revenue to come from exports in by FY26. The capex has been laid out at at 1,000 crore rupees over FY25, and it's currently clocking utilization levels of somewhere around 80%. And it has also said that it won't really need any more greenfield capex for the next couple of years. Now, this is one comment that has been received well by the brokerages, because they say that bite-sized focus or bite-sized capex is something that will lead to better return on capital employed going forward. And the stock was up somewhere around 7% at one point of time. It did cool off from the day's high, but ended higher by about 3% or thereabouts. The company hopes to sustain its ROCE, that's return on capital employed, in mid-teens due to moderating capex costs. In fact, let's also see how rubber prices have impacted tire shares, right? Since March, if you look at the last 3-month return on tire stocks, you will see that they have given negative returns, Yatin, because rubber prices have been on an upswing, and higher raw material costs have impacted tire companies' costs going up, and that has impacted the share prices as well. Nuvama has said that exports may rise to 21% from the current 19% by FY26, and rising share of exports will be margin accretive for Ceat. That's what Nuvama has said, and it says that EU is the first nation where the export ramp up may take shape, and US will be a little slow because it will have to establish itself there, whereas it is already present in a few EU nations. Nomura has retained its neutral rating, target price of 2,820. It has also pointed out that valuations are inexpensive given the reasonable return on equity of somewhere around 14 to 15%. And lastly, Motilal Oswal has a buy rating, target price of 2,930 rupees per share, and it says that focus on strategic areas will aid margins going forward. So all in all, brokerages are a little mixed, but the company has also pointed out that the increase in rubber costs have been more than what the company was expecting, because of which it has also passed on some price hike to customers. But all in all, its bite-sized capex is something that could bode well for Ceat in particular.
Absolutely. So those were the stocks in focus, Nandita. But I think the markets today are really looking forward to the cabinet allocations. I think the finance minister, the power minister, because we had
the railway minister.
Probably there are a lot of guesses which is happening right now in the marketplace. But I hope by today evening 5-6 p.m. That picture should be clear. We are just waiting for the official press release from the Prime Minister's office, and we hope that the markets like the allocation, because from finance minister to the railway minister to the telecom minister, a lot of speculation and a lot of hopes that PM Modi will be able to retain its key portfolios. Let's see. That is the important story that we'll be tracking on for Moneycontrol.
Well, most definitely, but of course the market reaction will trickle in the morning tomorrow, and we'll be back with the markets tomorrow morning at 9 a.m. So don't forget to tune in for that as well. But for now, it's a goodbye from me and Yatin. Thanks a lot for tuning in. Stay tuned to Moneycontrol for all your other news and updates.
Thank you.